and welcome to the week ahead video. Quite a busy week in terms of risk events on both sides of the pond, as we have some key releases for both the Eurozone as well as the US. So starting off over in the Eurozone on Thursday, we see the latest ECB rate decision where calls are pretty close for whether the ECB could make a move for further fresh stimulus in order to stem off deflationary pressure in the Eurozone. The speculation of this heightened last week as ECB's Weidmann appeared to drop his opposition to potential quantitative easing out of the European Central Bank, with this sentiment being cemented by comments out of Makuch, Visco and Liikanen, who all highlighted the potential benefits of having deposit rates below 0% last week. This is as the latest Eurozone CPI estimate figures is expected to come in at 0.6 from 0.7%, highlighting further the disinflationary pressure that the euro area is currently suffering, being twinned with low growth numbers. So that's likely to take the focus of the Eurozone as we progress through the next 5 trading sessions. But then on Friday, we see the change in non-farm payrolls figure out of the US. That's expected to pick up to 190,000, which would show a bit of a pull away from some of the poorer readings we've seen over the past quarter or so, given the very severe weather conditions we've seen in the northeast of the US since the beginning of 2014. So as we progress through the year, this effect is expected to accelerate and giving the Fed further justification to complete their QE taper. Finally, over in Australia, we have the latest RBA rate decision. They are expected to keep rates on hold at 2.5%. This is actually despite the Aussie currency printing at its highest levels in many years against the US dollar last week. So of course we'll bring you all those releases as soon as it hits the wires, as well as any other relevant commentary to your trading. But in the meantime, that's all from me. Make sure you have a fantastic week.